Hi everyone, I am S. Karpagalashmi, Assistant Professor, Department of Commerce with Finance, Dr. S.N.S. Rajalakshmi College of Arts and Science, Coimbatore. Let us discuss about indirect tax and introduction. Before we go to indirect tax, first we have to know about the direct tax and indirect tax. The tax, the term is derived from a Latin word taxer. It means estimate or value. The term tax means statutory payment to be made by the public and imposed by the government. Tax is a compulsory payment by a person to the government. The Constitution of India does not define the word tax, but according to Article 366, Section 28 of Indian Constitution, taxation includes the imposition of any tax, general or special, and tax shall be constructed accordingly. According to Professor Adams, the tax from the standpoint of the state, a tax is source of derivatives revenue. From the angle of investment, that is citizen, a tax is coerced payment. From the administrative point of view, it is a demand for money by the state. Next, we go to characteristics of tax. The character is first character imposed by the government. Taxes are paid in the form of cash. The aim is to promote the welfare of the people living in the country. Tax is a legal collection. The object of tax is to raise the revenue to the government. Tax may be imposed on income or wealth or on a commodity. It is paid by the individuals also. Next, objectives of taxation. The objectives are divided into two categories. One is traditional approach, another one is modern approach. Under traditional approach, we divided into main objectives, subsidiary objectives. The main objectives are to generate and meet to day-to-day expenditure of the government, to make provisions to fulfill the basic needs of the people. Taxation policy is a key instrument to bring socio and economic changes of people. Tax is levied to protect the home trade and domestic industry from the foreign investment. Prevention and control of concentration of economic power, that is income and wealth of few hands. Finally, a good taxation policies provide redistribution of income and wealth, that is making the lower income people to become rich, not to grow at a faster rate. Next, subsidiary objectives. They are: one of the economic objective of imposing taxes is for formation of public capital for the rapid development of the economy. In times of scarcity of a commodity, heavy taxation or high tax reduces the domestic consumption. To encourage savings and channelize such savings into investments in the form of shares of limited companies or units of mutual funds, etc. Then modern approach. Under modern approach, the objectives are ensuring accelerated economic development, increasing employment opportunities, reducing regional imbalance, protection of domestic industries from the competition of foreign industries, control and audience of trade cycle through anti-inflationary, promoting capital formation, promoting exports and restricting import. Then next we go to classification of taxes. Classification of taxes are divided into two: direct taxes and indirect taxes. Direct taxes, those which are paid after the incomes reaches the hands of the taxpayers. The immediate and ultimate burden will be on person. It is imposed on a person either on his income or wealth, and the tax liability cannot be transferred to other person. In indirect taxes, the tax where the incidence of tax is on the assessee, but the impact is on the consumer. If the tax is levied on the price of the goods or services, then it is known as indirect taxes. It is charged to businessman. First he pays the tax and later on he shifts the tax burden to the ultimate consumer by charging a higher